Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Actually, a couple of these steel companies are moving quite well. So JSPL is higher, so that saw a gain of close to about 2%. Just 5 minutes ago, we were talking to Sarda Energy, where the company told us that pellet prices have gone up significantly. Post Q1, if you compare it on a quarter-on-quarter basis, demand is looking good, as a result of which volumes too are on an uptick. So Sarda Energy is now higher by 8.5%, but it's pulled up other companies like JSPL, also which manufactures, pellets, as well as Jindal SAW. So that also should come up for you on your screen. That apart, keep a eye on Escorts. That's seeing some strength and on pretty good volumes. So Escorts is now higher by nearly 3%. Let's invite Ashwani Gujral and Prakash Gaba on the show now. Ashwani, afternoon, and thanks so much for joining in. A steady day of gains, in fact, building on it. Your thoughts, and how do you see the rest of the trading day progress?
So I believe that there is a second half rally that's possible, because overall through the day, the bears haven't really been able to take the market lower. So my sense is that you are likely to see more short covering above this 11,550 zone. So that way right now you should be buying Nifty as well as Bank Nifty. Individual stocks, Maharaja Battery is a buy with a stop of 880, target of 905. JSPL is a buy with a stop of 198, target of 212. And Petronet is a buy with a stop of 224, target of 238. Today, HDFC twins are doing extremely well after big declines. So today is a nice swing opportunity for people who want to hold these stocks for the next 3 or 4 days. So things which have had a correction and are coming back, often that is where the biggest opportunity lies. So pay attention to these two stocks.
All right, let's get Prakash as well in. Prakash, your take on the Nifty, as well as if you could give us your picks.
Nifty certainly is looking good. Seen a good up move and has seen a sideways correction. We have not seen a correction actually. It's more of a consolidation out there. I think upside is on. The technical targets on the upside is in the vicinity of 11,660. I think it's going there. It's a matter of time. If not today, then tomorrow. But it's going up. And as far as Bank Nifty is concerned, I think it's going up to maybe around 28,500 or closer to that. Maybe take a day or two for it, but certainly is up, and dips are buying opportunities. I'll go for two stocks here. Start with Kotak Mahindra Bank. That looks good. Looks like a good base formation. Can see a climb to around 1290 zones. Stop below 1256 should be fine. And the good old Reliance, certainly looking good. What a move that we have seen. I think it's heading to a level closer to 1250. Stop below 1210.
Ashwani, any thoughts on Tata Motors? The stock has been moving up for the last 3 days. Any early signs that maybe it's bottomed out?
See, that's only available in hindsight, and Tata Motors has this habit of proving you wrong, that the bottoms are not made so easily. See, the 200-day moving average is 345. So technically you can have a 100-point rally and nothing changes. So that way, it's a pullback after a big sharp decline. Maybe it can rally 10%, but I don't think that will really prove anything.
Some of these pellet stocks, the pellet producers in India, we just had Sarda Energy. They are telling us that pellet prices have moved all the way to around 7,300 rupees on a per ton basis. That compares with around 5,900 rupees on a per ton basis. Now, majority of this will flow straight to the operating profit, So you have Sarda Energy that's moved to the high point of the day. But it's not just that stock. We just had the management with us. Pull up some of this. Our ticker team, in fact, is alerting us. Jindal SAW, remember, they have a pellet manufacturing facility on the west. That stock as well has moved up. And Godavari Power and Ispat, take a look at that one. They have a big pellet capacity. Most of their profitability has been coming in from, from pellet sales. And that's why as well, that stock is screaming away as we speak. It's a party actually for all these pellet producers. Remember, just around 18 months ago or so, pellet prices were barely around, around 4,000 rupees or 3,500, and they were barely breaking even out there. Now with this increase, there'll be a lot of money to be made, particularly on pellet sales. And as the Sarda Energy management said, that in fact the demand is strong, not just in China, even domestically. demand is quite strong, and that's why all these stocks, they're running away as we speak. And in fact, our ticker team as well is keeping it alive after that positive commentary that came in from Sarda Energy. But let's move on then. And after nearly around 2 weeks of insensate downfall in in the flood situation in Kerala, normal life has come to a standstill. Businesses too have been hit, and one such company is Aster DM Healthcare that has hospitals that are operating out there. We have with us the management, Mr. Mopen, the chairman and MD of the company, who joins us. Hi, Mr. Mopen. Thanks so much, sir, for joining in. Give us a sense of your exposure to Kerala. What's the situation on ground? If you could give us a sense.
Yeah. So we have very thickly present in Kerala. We have hospitals in Calicut, Cochin, Kottakkal, and Wayanad. And most of these areas have had the brunt of the monsoon problem. And so we were in the midst of that, in the thick of that. So the situation was very bad until the day before yesterday. It started coming down yesterday, and today it's coming back to normal. At least now water has receded. And of course, now the problem.
Your exposure, sir, how many hospitals do you have in Kerala, in the affected areas?
We have 4 hospitals. Okay. We have about 3,000 beds and 4 hospitals in this area.
Okay. Mr. Mopen, I'm guessing these hospitals were running at pretty high occupancy, right, given the floods and the situation there?
Yeah.
Okay.
Yeah. The hospitals were actually running with fairly good occupancy, and the one of the hospitals, which is actually in an area which is surrounded by water, the hospital at Cochin, we had to take a proactive measure to shut it down for a few days. We didn't want water to come in and then the patients to be sent out in emergency. So on the previous day itself, we had all the patients moved to the other hospitals which could accept that, and that is the proactive thing which we did. But as such, there is no damage, nothing. Things are quite fine, and all the other hospitals are now becoming more, getting more of OP patients and as well as IP patients because of the rain issue.
Okay. Mr. Mopen, I know at times like these, we do not talk about the profitability aspect of this, but, this is a business channel and there are your shareholders. But were you providing free services? And considering that one of your hospitals, the one in Cochin, was also shut for a few days on account of severe floods, would the profitability of, the hospitals get impacted in the current quarter on account of these last few days?
Yeah. So, as such, I think so far our hospitals of the 4 locations, in 3 locations at least there has not been much of an effect, anything particular due to this, no increase or decrease. Okay. Whereas, as you rightly mentioned, this one hospital where there has been this temporary closure, there will be some impact on this day's collection. But one thing which is definitely is going to happen is that post this monsoon and all these issues, there will be more of illnesses due to many reasons, including the communicable diseases and all. So we are our doctors are going to all these places and trying to help in the camps as well as in wherever we can. But hospital, when patients come in, the numbers are likely to increase. That's what we foresee. Absolutely, sir.
It's a calamity. It's more than a numbers game, but it's good to know that, in fact, you're reaching out and you're trying to stabilize things as well. So that's good news. But, if you could just give us a sense of your revenue breakup, how much of it do you get from India and how much of it do you get in from the UAE?
Yeah. So if you split the revenue, 83% of our total revenues come from GCC.
Okay.
And 83%.
Okay.
Okay. Mr. Mopen,
of our revenues.
Go ahead.
83% comes from outside India, that is mainly GCC, and that is mainly UAE. And the rest 17% comes from India. So that is a split up, and the profitability, if you look at it again, is maybe around 85-86% is from GCC and about 15% is from India. So So that is the split up of the revenue as well as the EBITDA.
Mr. Moopen, since we have you with us, if you could just throw some color on how, you know, the months of July and the half of August have been for the company.
Yeah. So our first quarter, that is starting from April to June, is we have done very well. And if you look at our results, we had a 14% growth on our top line, but our EBITDA increased by 118% and our net profit increased by 125%. This happened because we had the loss of 2 hospitals last year which turned profitable, and due to that there has been a tremendous increase in our EBITDA as well as net profit. And this has really helped us to go into a very positive situation. And in the next 3 months, we anticipate the same thing to continue, like, you know, whatever this 14% growth what we had when compared to the last year same quarter. But one thing which I want to highlight is that the first half of the year in GCC is a very lean season, and there is a huge seasonality because people travel out of country, they go for holidays, they go for because summer, students' holidays and all, even doctors go on leave. So first half traditionally gives you only 30% of your EBITDA, and 70% of your EBITDA comes in the second half.
Okay, all right. Final question, Mr. Moopen, before we let you go. Debt in your books, what is it currently? I think your finance cost is around 40-45 crores on a quarterly basis. So if you analyze that, it will be around 170 crores. What's the debt in your books? 1,700?
Yeah. It should be around 2,000 crores. I won't be able to tell you offhand, but it is around 2,000 crores.
And you're comfortable with it at those levels?
Yeah. Our debt equity ratio is only 0.6, and if you look at the EBITDA to debt, it is only 2.9. So we are very comfortable, and we are a company which is having significant EBITDA coming in. By end of next year, we think that we will be having free cash flow. That is what we are foreseeing.
Okay, Mr. Moopen, we'll leave it at that. Thanks so much for joining in. So one of the hospitals of Aster DM, which is situated at Cochin, was impacted by the severe floods, and therefore the company had to proactively shut the hospitals. But now I guess the focus will shift to containing the epidemic.
Absolutely.
As the rains have. Markets post the lunch break, particularly the Hong Kong market as well as the Chinese markets, have resumed their uptrend. And as we speak, at the high point over there, Hang Seng has gained close to about 350 points, and that keeps pushing our own markets higher. So if you pull up the intraday chart, you can see with the Sensex higher by nearly 350 points, we're at the high point, and the Nifty 2 is knocking on that 90 points gain as we speak. But moving on, India's largest health insurance company in terms of profits and premium, Star Health Insurance, is being acquired for $1 billion by Rakesh Jhunjhunwala and a consortium led by Westbridge Capital. Yash Jain joins in with the details. Yash?
Well, after almost an 18-month-long bidding process, it's finally a done deal for Star Health Insurance. A consortium of Rakesh Jhunjhunwala along with Westbridge Capital have been selected as the buyer for India's first standalone health insurance company. And sources tell CNBC TV18 that it was a race between the consortium of Rakesh Jhunjhunwala and Westbridge Capital with ICICI Lombard General Insurance, where ICICI Lombard General had submitted a bid amount of approximately 5,800 crore, whereas the bid amount submitted by the consortium led by Rakesh Jhunjhunwala was approximately 6,500 crore. So clearly, the valuation aspect went in favor of the consortium led by Rakesh Jhunjhunwala. And do remember that it wasn't just the valuation aspect. The current management of Star Health Insurance, led by founder V. Jagannathan, also somewhere wanted to retain the management and the operational control over the company. And that would have been only possible if a private equity player or an investor steps in and not any other general insurance companies. So the aspect of retaining the management control also got somewhere addressed with Rakesh Jhunjhunwala and Westbridge Capital coming into the company. Also, we have with us Nisha Poddar, who's been tracking this particular deal from the very first point. Nisha, now with this particular transaction out of the way, help us understand what would the new structure for Star Health Insurance really look like?
Well, thanks for that, Yash. This is the largest transaction that we have seen in the insurance space. The deal was kick-started in September last year, and since then it has seen various twists and turns, including the shareholders' dispute, which had really given it a breather in terms of the deal process. But now it's a done deal. Rakesh Jhunjhunwala, Westbridge Capital, and a clutch of investors are buying into Star Health, 100% of it, for 6,500 crore rupees. Now, before I come to the deal contours, the very important point in this particular transaction is that Rakesh Jhunjhunwala, an ace investor, from being an investor into companies, is now going to be in the capacity of a promoter of a health insurance company. That's a big change, and that will give this particular transaction most amount of prominence. He's going to, in personal capacity, own 35% stake, and his associates combined will be 39%. The consortium is led by Westbridge Capital, which through an AIF format, as per the regulations of IRDA and FDI, are going to hold 51% stake in the company, and its Safecrop Holdings, which is formed as the SPV in line with the regulations of the company and the insurance sector, which is going to buy out Star Health Insurance. In terms of the deal contours and in terms of also the valuations, which will set an industry standard, is going to be price to book of 6.8 times and price to earnings of 38 times, which may set an industry standard when it comes to the various IPOs and various transactions going.
The commodity space, where we have seen the rubber prices continue to gain up, even as the global rubber prices have been under pressure because we are looking at higher supplies there. The Indian prices have been on an upswing because that is Kerala floods clearly have had an impact. We have seen tapping of rubber suspended for last 15 to 20 days, and that is how it's expected to be for some time to come. The trees have been uprooted, the plantations have been underwater, there are no workers, and that is something that would continue to support the prices going forward. The industry is estimating that 140 rupees per kg is where you could see the rubber prices going forward from here. But the other thing that the global markets are watching out for is the US and China trade talks this week, and that clearly seems to be having its impact on the commodity prices. Aurobindo Gai now joins us to talk more about that. Aurobindo, hi. What are you sensing out of that? How is that sentiment playing in commodities right now?
Well, I think the talk is making a bit of positive sentiment. Of course, as we said, the market is seeing a bit of positive trend, but we are not so sure that the trend will continue to hold so much of gain. I think it is a temporary phenomenon, but then selling on rise would still be a right strategy maybe for some of the commodities like gold, silver, and base metals. I think the kind of gain that we are seeing is likely not to hold so much. So we would say gold is something that's still looking onto the bearish trend since it has broken $1,200 and around it is hovering around 1185. So I think in Indian market currently it is trading at 29,500 kind of levels for 10 grams. So a bit of pullback in the price maybe towards 29,560 or 570 levels. We should go short for the current October contract for a target of 29,300. So basically, we are giving a target of a new low price that I had seen in the last week with a stop loss of 29,680. So in the similar line, silver is something is also looking weak, and I think we should see a new low price of silver maybe around 36,500 maybe this week. So selling on rise would be the right strategy on gold, silver for the short term in this week.
Okay, all right. Thanks so much, Aurobindo, as well as Manisha, for joining in and running us through what's going on in the commodity space. But by the way, it's really good news for all the bulls in the equity market. We have climbed above the 11,550 odd mark, and things looking good. Let's see how the last couple of hours pan out. For the time being, we'll wrap up on this show. You stay with us. Business Lunch comes up next.